So there was an earnings miss, right? And I think that right now the market's looking for security and stability. And so you have a record-wide discount for uncertainty and for the cyclical end of the market. And with a miss here at CAT, that just adds the uncertainty a little bit. So I think that's what's happening.
Just so you know, earlier we had talked about how revenue came in line, but earnings was a big miss. I had reached out to the company to kind of ask for more guidance on that. They just got back to me and said part of it is the timing of restructuring costs. They pointed just to the idea that the company still expects price realization to offset manufacturing costs for the full year. But again, what they said in the release, that assumes that recovery in the oil and gas near the end of the year and dealers working through higher machine inventory levels. So I guess kind of hoping that it's going to be made up for down the road with price increases. Yeah,
now there's a couple different things going around. CAT's a big company, and there's a lot of different patchy weaknesses and strengths in the global economy right now, right? So on the oil and gas side, they don't just do fracking. They also do turbines for gas pipelines, right? So some of that's project-based. It moves around, it shifts, and so you could see some of that come back. Dealer inventory is a different issue. We have high inventories in the industrial economy right now. That's a bit of a concern for us, and it wasn't a positive to see CAT's dealer inventories, kind of go up this quarter.
They also said there was a negative mix. They had an unfavorable mix of products on the quarter, primarily within energy and transportation and construction.
Exactly. So you have big profitable turbines that maybe didn't sell as much this quarter, and maybe will sell some more next quarter.
The tariff issue, the China issue, any commentary on any of those things that you can give us?
Well, there's a few things. I think tariffs have put a lot of uncertainty, obviously, into the economy. I think that's caused inventories to rise up, which isn't always a great thing. You don't want to overproduce and underproduce and overproduce, and so that's caused some uncertainty, not just at CAT, but across the space. And then the continued sort of will we resolve, will we not resolve, makes it difficult for managers to plan volume production and where they source from, right? So that's been a little bit tricky. And then within China, I mean, you've had a slowdown, but you've also seen construction activity and construction sales do fairly well. CAT's had many, many years of gaining share and doing very well in China, selling bigger products, more durable products, just, good stuff, and then several months of losing share again. So whether that's related to geopolitical tensions or just pricing, it's not yet clear.
So when would you say, wow, this is a great value?
We say that now, and we'll see. So machinery and cyclicals really across the market are trading at a very widespread to tech, and to more stable growth. And I think that we start to see that narrow when we get a little bit of certainty. So misses like this, you don't edge up on that uncertainty. But you have had multiple years of underinvestment in oil and gas, underinvestment in global mining, and that will catch up someday. And so, CAT's sort of time to shine in some of those markets hasn't happened yet.